Hey guys and girls, it's Nathan Birch here from B.Invested.com.au HQ. Today I'm answering some questions in from Facebook, and I've got a question here from Tammy on the Facebook page. If you've got any questions to come through, put them on facebook.com/beinvested.com.au. The question from Tammy is, what are your thoughts on the property market over the next 12 to 24 months with all the new investment lending changes? In particular, will rents increase due to investors wanting to put them up from the increase in interest rates? And will capital growth slow down because of the new lending restrictions on investors? Good questions, Tammy. My thoughts on the property market is we've got an interesting country we live in, and there's lots of different markets that are always operating. Over the last 5, 6, 7 years, there's been a lot of mining boom stuff happening with lots of growth and good rental returns and stuff like that. That has come to a halt and shifted back to the capital cities and the metro areas. I've always been a big fan of the metro sort of properties, being i.e. Sydney, Brisbane, Melbourne, those sorts of areas which are capital cities. You'll always see activity there and they're much stronger and less risk. Based on some markets, say for instance the Sydney market, I think the Sydney market over the course of the next 12 months to 24 months will stay pretty flat. I think there's still a bit of growth to be had in it because there's lots of people out there wanting to buy homes to live in. I personally think that there is a rental boom coming to Sydney. It's been very evident with the reporting that I've seen coming through from our Blink offices, Blink Property, because we just do property management in Blink Property if people don't know what that is. So from a property management front, I'm seeing that rents are starting to creep up, and I don't think that that will really come to fruition until 12 to 24 months time. Will be in a full-blown rental increase. That's just my prediction. Don't hold me for it, but I'm pretty correct on my previous track record. As for Gold Coast, for example, and Brisbane markets and Cairns, and lots of areas in Brisbane, I think that they're early stages of the market growing and booming and coming into that sort of cycle. So I think there's a lot of growth ahead for those markets, and I think the markets will go up there. So every market's different. I don't really see the rental market changing up in the Queensland areas. I see in Sydney especially that rents are going to be rising. So something just to take note. Do I think that the new changes in lending will really affect the market and we'll see blood on the streets? I don't believe so. We saw, going back a couple of years ago, when the GFC was around, a lot of people may forget it now, going back about 7 years ago, the GFC was around, people were scared. Instead of the country going into recession, what happened is the government pulled out the interest rates and pulled the interest rates down 1% per month for 3 consecutive months, and that was to increase spending and keep the country buoyant. The government do not want to see a crash, they don't want to see anything crash, they just want to see things stay in line. Basically, it is to curb the growth of property. These changes have been put in place, so we don't see anything happen. We don't want to see it. We're being preventative from seeing a GFC style crash like in America. That's what the precautions are. My layman's term version of it to you guys. So thanks for the questions, keep them coming. If you've got any further questions, put them on facebook.com/beinvested.com.au. Have an awesome day.